Closing trades and holding out quite comfortably for the equity markets. In fact, the broader markets too are looking strong, but it's the frontliners that are clearly taking leadership. Let's connect then with Mahantesh Sabarad, who now joins in on the show to discuss his outlook on the markets. Mahantesh, hi there. Good afternoon. What are you making of the kind of reaction that we've seen to the strain of the vaccine that led to quite a global rout? Seem to have stabilized and found our feet around the 13,400 mark. But do you believe that this conviction is going to be long-lasting?
Good afternoon. I think the markets have tumbled quite a bit yesterday. The surprise was actually in the 3% fall that we saw yesterday, just on the news of that new coronavirus strain. But then the recovery that you are seeing right now tells you that that surprise element is now being factored into the markets, and I tend to believe that markets will take a positive outlook and eventually move higher and higher. I still believe that what we saw yesterday was merely a flash in a pan, just a one-day dip. We will see markets recovering here in onwards.
Okay, fair enough. Meantime, what's the outlook when it comes to what's going on within the aviation space? Those airline stocks globally are taking a huge knock and back home as well. The likes of Indigo, SpiceJet have taken quite a tumble. While there had been that sense of recovery, do you think that every time we get a spell of bad news with the coronavirus, these stocks are the first and will be the most susceptible to any sort of downtick?
The airline business is such that the cash flow is very much dependent on the way the freedom is available to travel. Right now, we don't have a great deal of flexibility or freedom to travel, whether it be domestically or internationally. There is an element of restriction imposed on such travel. So when you have the business being constrained by an element of such restrictions, airlines will undoubtedly face problems when it comes to setting the tone for financials. See, underlying financials will be determined by the revenue that forecast that you may have. Travel restrictions would mean that the revenue forecast will be tempered down. And yes, you are right when you said that these stocks will therefore face the first damage whenever more restrictions come into place. So the story thus far was that for airlines, the restrictions will be gradually removed, and we will have freer travel happening henceforth. But that's not really happening. The only good part that these airlines have is that they at least have to reckon with low oil prices, low fuel costs, and that helps in a way their operations. Otherwise, it's becoming very difficult when it comes to forecasting any form of revenue beyond a few months for airlines.
What about, with a fresh round of stimulus coming in, what we've been seeing on prices of commodities, when it comes to some of the metal names, for example, do you continue to, be optimistic on that trend? Because, unlike other scenarios where possibly we would have seen the market move away from some of these names, the other external factors, and particularly global factors, do seem to be working in their favor.
Yes, metal is a sector which is unduly influenced by the global factors. In fact, the metal as a pack, metal as a sector moving up on the markets has to do with how Chinese economy is recovering. Finally, the demand for metals is in a way dictated by the kind of activity levels that you see in China. China is a big consumer of various commodities, including metal. They not only consume those metal products for themselves, they are consuming it for feeding on to the world demand. So when you have Chinese factories buzzing with activity, you naturally see that metals as a sector start going up, commodity prices start moving up, demand for basic raw materials go up, and when that happens, the metal sectors kind of shine. So this is, I would say, a volume come price-led recovery that we are seeing in the sector. Volumes in terms of production volumes, prices in terms of prices of the products. That rally, I think, will continue for a while because Chinese economy is doing really well. Even our economy with infrastructure projects coming up will start doing better in the next year and will fuel its own set of demand for metals. So I think the sector will continue to do well. But some stocks you have to be very cautious on the front of valuations.
Surprising me somewhat is real estate, because we selectively, but we've had a move on, some select names. Kolte Patil's jumping today 7-8%. DLF was looking good a little earlier today. So we've not seen that complete knockoff effect on realty either.
So as far as realty is concerned, this is a sector which we generally do not recommend. We never really look at realty stocks. These are not stocks which are meant for value creation or wealth creation for investors. There are only trading plays available for these set of stocks. So we generally stay away from the realty sector, irrespective of what is happening in terms of whether the realty prices are up or down, or whether the growth in terms of sales is happening or not. It's a sector that we tend to avoid.
When it comes to metals trades, because yesterday, because of it being a globally linked sector, you saw some very sharp cuts within metals. Of course, they're bouncing back, as is the rest of the market, but would you be a little cagey about whether to hold longs going forward within metals?
No, I think it probably would depend on what the kind of time frame is when someone has bought the metal stock. So for someone who's bought, for example, at sub 400 levels when the rally actually started off, or when JSPL was at sub 200 levels, JSW Steel at just on the 300 odd mark, then I think for them it's a lot of cushion for traders, because these 5%, 10% odd correction to these names, it really wouldn't dent the longer term or the trend which had started for these metal stocks. And the second point to note is the time frame. So if my for example, if my view is very, very short term, I think in this kind of a market scenario, the first port of call is to try and trim the risk over here and ensure that you don't have too much of leveraged or high beta sectors in these kind of markets, because when you see the volatility spiking up higher and then the option positions being more volatile, or intraday volatility being extremely high, you would generally want to trim off your risk position. So I think that should be a position sizing for each individual participant. But then again, I think the question falls down to if you've bought these metal stocks at far lower levels, and if you're expecting that this could play out as a multi-quarter, multi-year trade, then I don't believe that such kind of correction should probably not give you confidence as such, because I believe that if these stocks, for example, if Tata Steel comes back to, say, for example, 550 odd levels, if JSPL comes back to, say, 225, then I believe that these could be good territories where traders who wanting to average these stocks, I think they could come back again and look to buy these stocks on key support levels. So I, for one, believe that metal stock and the metal story is here for the longer term perspective. And for someone who's already bought at lower levels and is looking to average, then wait for maybe one more round of correction. I think the market positioning just indicates that there should be more trimming off of risk, which could happen. And when you see risk off mode, from the markets shaping up, it's not a process or a phenomena of 1 or 2 days. It's a process and a phenomena which takes at least a couple of weeks. And in that couple of weeks, there are bound to be opportunities where these stocks also go through one more round of correction.
Right. Okay, just taking a look at what the texture of the market is. We're holding at the highs of the day, up a solid 1% as we speak right now. Sectorally, you'd have to say, while lots is contributing, of course, it's the multimedia names, aviation, those categories definitely sitting on the sidelines. Media is a loser today, real estate is a loser, and by loser I mean they're only flattish as opposed to the rest of the recovery in the market, and cement and cap goods as well are relatively quietish as opposed to what the rest of the pack is doing. You could add to that an automobile as well, because some of these automobile names like a Maruti, etc., are the ones which are sitting on the sidelines. HDFC Bank as well, although it's trying to recover, but it's a very marginal uptick there. And Reliance as well is absolutely flat as we speak. Had it not been for this kind of a move on Reliance, and if it pushes ahead a little bit, maybe we could see a better print on the Nifty as well, and maybe a climb up and at least an attempt to claw back to that 13,500 mark. For now, Reliance is absolutely quiet. Kunal, a quick check on the charts of Reliance then. At 1937 right now, not recovering with the rest of the market. What's happening here?
Not recovering, and surprisingly, the stock has just not participated. We used to always look up to Reliance Industries. Not in the last couple of months, but prior to that, and especially when the March recovery started. So this different behavior and nature of the stock price completely aloof from the market reaction or the market volatility. I think has been confusing a lot of short-term traders. But that also means that the stock is still not out of the consolidation and that downward drift, which that also means that the stock could probably take some bit of more time to consolidate, maybe try and amble around that 1850 mark once again, try and test, form that double test or double bottom test. I think those particular formations could be likely for the stock price. But I, for one, believe that these are ideal opportunities for someone who's wanting to buy the stock. When it was roaring up higher, 2,200, 2,300 levels. I think getting the stock at a 15% or a 20% discount from its all-time high levels, I think it's a very good opportunity. The stock is also now very closer to its 200-day moving average as well. So there are a lot of price-wise supports, there are a lot of indicator-wise supports, and I think in that regard, I think Reliance Industries at 1850 levels could be a good long-term bet or someone who's looking to average. Short-term wise, I still believe that maybe the stock could go through a further round of consolidation because of its different behavior and nature of not participating in market volatility.
Okay, stay with us, Kunal. Lots more to chat about. And what's perhaps been the only saving grace in today's market to a great extent has led to the pullback, rather, has been that IT cluster. Check in on the names like Mindtree, Coforge. In fact, they're all building strength. HCL Technologies, Infosys, Wipro and TCS included, as Goldman Sachs has come out with their very positive report on the IT space, where the preference lies with the likes of Infosys, Mindtree as well as Tech Mahindra. In fact, let's take it across then to my colleague Poonam Sane, who joins in to decode that Goldman Sachs note. Poonam?
Well, after Edelweiss as well as Credit Suisse, we are now seeing Goldman turning fairly bullish on the entire IT space. In fact, Goldman believes that we're going to see a very strong demand for technology adoption on account of COVID, and also the overall IT outsourcing is likely to see a very strong pickup that is going to last for at least 2 years. They believe that going ahead, technology upcycle is likely to be in 3 phases, with the first being a large-scale shift to cloud, second, the building of applications in the cloud native world, and third, collaboration between the IT service workers as well as customers to build new technology solutions. In fact, Goldman does see a double-digit growth for the IT industry, and also they do see margin expansion on account of operating leverage. Infosys as well as Mindtree are the top picks on the high conviction list, followed by TCS, Tech Mahindra as well as Emphasis. They do have a sell rating on Wipro. Goldman believes that Infosys is likely to see an industry-leading growth, and Mindtree, with its focus on digital and managed service contracts, that is going to help them scale up with a consistent increase in margins. They like Tech Mahindra on account of the revival in telecom vertical as well as 5G adoption, and TCS is also going to be a very strong beneficiary of the third wave of IT outsourcing. So yes, again, bullish view coming in for the entire IT space.
Thanks very much, Poonam, for giving us those details. Let's take a quick break right here on Closing Trades. Come back for more.
Welcome back. Let's take a look at some more of those afternoon trends then. We're actually recovering pretty fast. So we're also now up close to 1%, 8.9%, 13,445. Some of these mid-cap financials are also bouncing around. Mahantesh, Canara, Bandhan, Federal, some of them definitely seeing a little bit of buying coming in. Now, what do you make of that trend? It's not really the frontliners, but some of the other smaller banking names.
Speaking, banking is a space that we like, and whether it be bigger banks or smaller banks, this is the time where they would be able to expand their margins. This will be the time where, despite the NPA pressures being there, they will have better recoveries as we go forward. So the outlook is brimming with hopes for the banking sector. But when it comes to the smaller set of banks, you have to be really very choosy about which banks you're gonna select, because some of these banks are have not particularly done well in the past NPA cycle, when the NPAs were actually going up. And that being the case, it becomes very difficult for them to grow. Plus, the other aspect that you have to look at in the smaller banks is their ability to raise capital. Because very often the stumbling block to growth is capital. If they have adequate capitalization, then of course you can look at the smaller banks. Having said that, the larger set of banks are the ones who are receiving the majority of capital contributions that are coming to the market. Their capital adequacy is pretty sound and robust, and therefore their outlook is better. So I would rather look at the larger set of bank names than the smaller banks, because of the whole issue about capital adequacy being a little on the lower side.
Okay, fair enough. Let's also get some, some chart checks on a couple of these names, Kunal, from within some of the financials that are moving today.
Well, I think a lot of stocks which are looking attractive to me, and I think first of them, which I think stands out, is Chola Finance. I think that stock has been looking extremely strong, and if you remember that there was this period in the month of November, October end and November start, where many of these financial stocks traded extremely well. So I think that pocket looks quite charged up. Bajaj Finance is still trading around that 5,000 mark. So I would expect that the stock would go through some bit of consolidation. On the banking names, I think the two important stocks to really watch out for would be the trends on HDFC Bank and Kotak Bank. I think I for one believe that if there's any signs of recovery and durable recovery for that extent into these names, then I believe that it could have a direct correlation and a direct impact on the positive side for the bank Nifty. So I think the trends on both these stocks could probably dominate not just the other peers, but even the banking index overall as well. So I think these are few names which I think as a short-term trader you have to try and watch upon, because in times of distress or in times of capitulation or in times of corrective phases, the markets will always want to watch how the leaders behave and how the leaders perform, and whether there is a leadership breakout as such into these names. If that happens, then the market gets into more of a positive sentiment cycle. I think that's what the market should be looking out for. So I think these are few names which you should be, as a short-term trader, which you should be watching out for.
Right. Okay, Mahantesh, Kunal, both of you, thank you so much for taking the time out and joining in today.